Okay, so now we're going to discuss what's the difference between growth versus value investing. So in general, growth investors they seek companies that offer strong earnings growth, whilst value investors seek bargain stocks that appear to be undervalued by the market. So on the left-hand side, you've got growth characteristics. Emerging companies usually don't pay dividends, higher valuations, high expected short term earnings growth potential. Those are the likes of Amazon, Facebook, Google, Netflix. So, companies that everyone thinks that they are the future. Value companies, conversely, are established companies that may be in transition. They are more likely to pay dividends, they have lower valuations. They are stable, expected long-term earnings growth potential. Those are the likes of McDonald's, Starbucks, Mondelez, Nestle, things like that. So, how does this two compare depending on the market? Well, it's very easy. When the market is buoyant, when things are going well, growth companies tend to do extremely well because the future becomes here. Whilst when the market is actually going on downhill, value companies brings security to investors. The way that you analyze value companies usually is by fundamental analysis, looking at ratios like P ratios, price per earnings, or return on assets, ROA, or price per book value, which is the price of liquidation of a company. So there are a lot of different metrics to estimate the value of a company. However, if you're looking at growth stocks, what you're trying to do has nothing to do with those values because their entire premise is the price that they will have in the future, the amount of dividends that they will be able to distribute in many, many years from now. How fast is the company going to grow? So, because of that, none of the things that make value investing relevant are mostly applied to growth investing. The growth investing is about, okay, what's the size of that market that the company is trying to poach? And do they have the capabilities of doing that? How long is it going to take it? And then you compare things like the interest rate, because if you had your investment, let's say in bonds or treasuries, you would receive a next return. So therefore, you would expect that that growth company would achieve a lot more. So that's, in a nutshell, is the difference between growth and value investing.